Hello, trading has closed on the 11th of August 2025. As always, we will start with our disclaimer, go over our calls, and then make our predictions. This is my trading plan for Tuesday. Tuesday is August 12th, 2025. Please remember, it's a plan. I can change my plan. My plan can be wrong, and trade at your own risk. We looked for the pattern with the early low. This is it. We said that if it were negative instead of its usual positive tendency, it should lead to lower prices coming. That's negative. Now, time doesn't run out until early tomorrow. If we trade over this high early tomorrow, all this negativity goes away. But for right now, that's a negative pattern. And it comes at a time when we think the market's probably making a top of some significance. This is a reminder of what we said. During the day, MEJT gave a signal to go long in the morning, a buy signal, an ultimate buy signal. We got the minimum target immediately, but that didn't tell us what the next move was, which was down. When it came down, system said it was false, would retraced. We almost always get more than the minimum, which we did, so that's played out. In the afternoon, it now says this drop isn't for keeps, gives us a target of 6392.90, and unless we gap down smartly at tomorrow's open, system is calling for that price to print tomorrow. It's almost 20 handles higher, but the catch is we're close to a top, and MEJT practically always leaves a failed price target at a major change in trend, so I think that one might not print. The FOMC announcement price was 63.8657. We piddled around there for a long time and then broke below it. This tends to separate markets going up from markets going down. Now it can all get reversed at tomorrow's open when the CPI comes out. That we don't know. But for right now, even after breaking high, for gapping up, hitting a higher high, we closed under all these highs, closed under the FOMC announcement price. Time hasn't run out yet, but for right now, that's a very negative pattern. We still seem to be stalling right at this trend line, right where we said it would stall, and we still need to break under this low for confirmation we're not getting anywhere. But that's your impulse in a day or two, and after a week or so, a week and a half of rallying, we can't recover that. So far it's not backing, it's just backing and filling and nothing else. And once we break through this and this, which I think will happen, but hasn't happened yet, we should be in wave magenta C, which should have some kind of relationship to wave magenta A. It's not the kind of thing anyone with anything but a long-term perspective wants to sit through. Well, I can still count this as an ABC, and when I look at this brown C, I can still come up with a count that works. There's your A, there's your B. The C has a black C has a good fib relationship. Red C has a good fib relationship. C and A don't, but they don't really have to. But I can count it, and we still just haven't recovered the drop from the all-time high. In spite of the fact that we keep gapping up, we can't hold on to it. Back in the 60s, there was an analyst named Stan Weinstein. He had an indicator. He would look at what happened in the first hour of trading and the last hour of trading and forget the rest of the day. So he would just look at what happened in the first hour, which was up. He would look at the last hour, which was down, add them together, and he would get this as a negative day. Now, 0.25% I call essentially unchanged, but he would call it negative, and he would take a moving average of this thing, these days. The idea was the first hour it's mostly the public trading, and they're usually wrong. They place their orders and go off to work. And the last hour it's the pros trading because everyone else is done for the day. And when the amateurs are buying and the pros are selling, and it happens over and over again, and we gap up over and over again and just can't hold on to it, it's really a sign of churning at the top. Now you still have to have the break, but the more we go, the more signals we get that the downside break's coming. We have to use the mixed signals rules. Here's why. Pattern has really low, which doesn't tell us where we open. It is bullish. There's a higher MEJT target. If we don't gap down significantly, the rules call for it to print. Just remember, MEJT typically leaves a fatal target at major changes in trend. I didn't make it one of the rules. Maybe I should have, but the book's already written, so I can't go back and get my eraser now. It is negative. Today's normally bullish pattern was negative. Unless we gap and promptly overtake the high of day, we should see lower prices sometime tomorrow. Now the consumer price index report comes out before the open tomorrow. It can lead to big moves. I just can't predict the response to these reports with a high degree of accuracy. The break under the last FOMC announcement price, unless recovered promptly, is negative. We've stalled at resistance. It should be just a matter of time until the decline starts. We still need to undercut the last swing low for confirmation. I hate to jump the gun on these things when you're in a strong rally like this, but this is looking more and more like we're going to break down, and probably break down pretty soon. This could have been the last straw today. Now, I don't know the response to the consumer price index report tomorrow. That could undo all the damage we did. That we just don't know. But right now we have a stilt, a diamond, and we're starting to make another stilt. If we get another stilt-like move down, it wouldn't surprise me, even though the pattern doesn't have to go to completion. All this market needs is a little push. It needs to start down with more authority than this to convince me that we've made a top of some significance, and we're going to probably drop, which could drop a couple of hundred handles here before the bull resumes. And again, if we rally past these highs and keep going, then I'm wrong, and I don't have any money on this yet because the report's coming out tomorrow. But I think longs need to be cautious here. This is one negative indicator after the other, and pretty soon you have to stop signaling and start dropping. And I wouldn't give it too much more time if we didn't start to drop, but right now it looks like we're making a top, and that is today's call.